A beginner's guide to fundamental analysis. Unlocking the true value behind the stock ticker. What is fundamental analysis? Fundamental analysis is the process of evaluating a company's financial health, competitive position, and future growth potential to determine the intrinsic, true value of its stock. If the market price is below this value, the stock is considered undervalued, a potential buying opportunity. It is a cornerstone for long-term investors like Warren Buffett, who believe in buying great companies at fair prices. Why is fundamental analysis important? The stock market can be noisy, influenced by news, sentiment, and speculation. Fundamental analysis helps you see beyond short-term volatility, make informed, logical investment decisions, build a portfolio of quality, sustainable businesses. Key components of fundamental analysis. 1. Company financials. These are the heart of fundamental analysis. You'll study 3 key statements. Balance sheet shows what the company owns, assets, and owes, liabilities. Income statement reveals the company's revenue, expenses, and profits. Cash flow statement tracks the movement of money in and out of the business. 2. Financial ratios. These help interpret financial data and compare companies. Some must-know ratios. Ratio purpose. P/E, price to earnings, is the stock over or undervalued compared to its earnings. EPS, earnings per share. How much profit does each share generate? ROE, return on equity. How efficiently does the company use shareholder funds? Debt-to-equity ratio, is the company financially stable or over-leveraged? Current ratio, can the company meet short-term liabilities? 3. Qualitative factors. Numbers don't tell the whole story. Look at business model. How does the company make money? Management team. Are they experienced, ethical, and transparent? Competitive advantage. Moat, does the company have an edge over competitors? Industry trends. Is the sector growing or declining? Regulatory environment. Are there risks or benefits from government policies? Intrinsic value, the core goal. Using tools like discounted cash flow, DCF, or earnings models, investors try to calculate the stock's intrinsic value. If a stock is trading at 400 Indian rupees, but its fair value is estimated at 500 Indian rupees, it may be a good buy. This is the essence of value investing, buying something for less than it's worth. Steps to perform fundamental analysis. Choose a company you understand, e.g., FMCG, IT, banking. Read annual reports, balance sheet, income statement, etc. Analyze key financial ratios over 3 to 5 years. Check industry performance and competitor positioning. Study news and management commentary to understand future outlook. Calculate intrinsic value and compare it with the market price. Decide to invest only if the stock fits your financial goals and risk appetite. Tools you can use. Websites: Money Control, Screener.in, TickerTape, Investing.com. Apps: Zerodha Varsity Educational, StockEdge Grow. Reports: Company Annual Reports, Analyst Coverage. Data: NSE/BSE websites, SEBI updates. Common mistakes to avoid: ignoring debt levels and assuming all growth is good. Relying only on 1 year's data. Always check long-term trends. Blindly trusting analyst recommendations. Investing in companies you don't understand. Fundamental versus technical. What's best? Purpose: fundamental analysis, technical analysis. Focus: business health and value, price patterns and trends. Time horizon: long-term investing, short to medium-term trading. Tools used: financials, ratios, reports, charts, indicators. Mindset: investor trader. Tip: many smart investors combine both to make more informed decisions. Final thoughts. Fundamental analysis is not about quick wins. It's about understanding what you own and why. If you want to build wealth slowly, steadily, and safely, mastering this approach is essential. Start with companies you know, keep learning, and think long-term. The market may fluctuate, but the value of sound companies endures.